Right. Well, I wanted to take this opportunity to talk about the CPI data that came out today. It was rather shocking, and I'm sure everybody knows by now that the market basically tanked as a result of it. Just to recap really briefly, the market was expecting that, just make sure my hair looks good here. The market was expecting that the CPI was going to come in at like 8.1%. And it surprised. It came out higher, 8.3%. The core came out at 6.3, and that was a rise from 5.9 the previous month. Okay, so this basically obliterated the narrative that we've had to put up with for the last couple months of people on television, on all the televised news stations, the financial news stations, talking about as soon as the economy starts to take a hit, the Fed's going to pivot and then they're going to start lowering interest rates and everything's going to be great and the market's going to start rallying again. All right. Now, I did a video on this called Fairy Tale Economics, which I'll put in the description below. So take a look at that. I did it about a week ago, but it goes into a lot of detail about all these ridiculous fairy tale theories out there, which show a distinct, in my view, lack of understanding about what's going on currently with the Fed and the stock market and all the markets, the bond markets. This surprise that came out today is really no surprise. I have been saying that this inflation is endemic. It's very strongly embedded in the economy, and it's going to take a long time and a lot of raising of interest rates and quantitative tightening to wring all of these excesses out of the market and the economy that the government has put into place with its excessive fiscal spending, and the Fed being in denial for about a year and a half and continuing to print money and keep interest rates at zero. Okay, so this entire thing was fabricated by the government and government mismanagement, in my view. So now the Fed is playing catch up, and they're raising interest rates rather aggressively. And the thing that people are not focusing on is not only are they going to have to raise interest rates, they're also going to have to tighten credit, and they do that through quantitative tightening, which basically removes liquidity from the stock and bond markets in the form of reducing the balance sheet. Okay, everybody focuses on the interest rates, but the thing you have to realize is they're going to have to, in tandem, reduce the balance sheet, which is currently around $9 trillion. Okay, now if that wasn't absurd enough, and in case you haven't been aware recently, the government, rather than pulling back on its spending, just spent another $1 trillion, okay, between the infrastructure bill and the Deficit Reduction Act, which I made a lot of fun of in the video that I referred to. That you should really check it out because I did a whole thing about it. But they just spent another $1 trillion. I mean, these people are incredibly out of their minds, and they're making decisions purely based on politics, and they have no regard whatsoever. In fact, they have a disdain for the American people, because the average guy's out there is trying to fill up his gas tank or buy groceries or heat his house, and the dollar amounts that they're throwing out every month are going up and up and up. Okay, and it makes it even worse because, as I've said many times, they're saying the official print is 8.3%. It's not 8.3%. Everybody knows it's not 8.3%. If you believe that number, okay, I've got marshland in Florida I want to sell you, and I can't sell it to you fast enough because we all know that the real rate is in the mid-teens to as high as 20% in some categories. Let's just go through a couple of these categories. It's just really insane what is going on out there. Now, energy prices fell slightly, okay, and that's only because gas prices went down, okay, because everything else went up. Let's just take a look here what we have. Okay, food costs. Okay, food costs rose 2.2% in the month. So bread, for example, is up 16.2%. Bread, okay? Eggs are up 39.8%, okay? Canned fruit, it's up 16.6%. And they want us to believe that inflation is 8.3%. Okay, let me see if I don't have, oh, electricity was up, mid-teens. Heating oil was up over 60%. And I can tell you, I have a house that is heated by oil, not this house that I'm in here, but another house. And my bill went up, my recent bill went up 100%, okay? Not, 5%, not 10%, not 50%, 100%. All right, so that's what people are dealing with, and the utter disregard of the government to the plight of what people are going through is just, it's not only astounding, it's angering. I'm angry. I'm pissed. I don't want to use bad language, but I'm pissed here. I'm getting so sick of a non-responsive government, and then they lie about everything. I heard Joe Biden's going to get on TV later today and brag about the Inflation Reduction Act. Okay, brag about how it's working. I mean, how can he do that in the face of this data? It's just like we're living in a world of unreality, and it's just getting really bad. It's going to be interesting to see what happens in the midterm elections. But so I think that the thing you really have to keep in mind is, what is this going to do to stocks? Okay, I've said for a very long time, if you've been watching this channel, that this is one of the worst setups I've ever seen in my life. Going back 30 years of following the stock market, it's the worst setup I've ever seen for stocks. Okay, if you think stocks are going up from here in the next 2 months, you completely don't understand how the capital markets work. I mean, I'm sorry. I couldn't disagree with you more, okay? And I made the point that, and I'm not trying to be condescending here, but I made the point in past videos that I honestly think that many of the money managers out there, the people running money and the portfolio managers, etc., are just not old enough to have experienced anything like this before, so their frame of reference cannot process what is happening here, okay? The Fed hasn't even begun to reduce its balance sheet yet, okay? $9 trillion. Hasn't even started. And they've only raised interest rates like a few times. We're at the beginning of what they have to do, okay? Unemployment, the unemployment rate is still in the 3% range. That unemployment rate has to get up to like 6% before we're going to make a dent in this thing. They've got a long way to go. So if you're one of these people waiting to buy the dip, you're in. Now, having said that, I think the next couple of months are going to be extremely volatile. I think a lot of chickens are going to come home to roost. I think crypto is going to continue to go down. All the high beta, high tech growth stocks and all that stuff is, forget it. It's done. You're going to have to see the VIX go to alarmingly high levels before you're going to see the kind of blow off panic selling that indicates a bottom. And as soon as I see that in the market, I will let you know. But we're so far away from that. The VIX is like, I don't know, today it might be higher, but I check it every morning. It's like 25. I mean, that's the fear index, right? It's based on option premiums. At the height of the pandemic, VIX got to 85. Okay, now it's at like 25. So, Goldman and Morgan Stanley have said that the S&P, we could see the S&P go as low as 3,000. That's a pretty dire prediction. But look, we're in for rough waters here. This is a vicious bear market, and it didn't even get vicious yet. Wait till you see what's going to happen. And look, I can't predict the future. I don't have those abilities. Nobody does. But I'm just saying that when you look at the setup, when you look at the interest rate trends, when you look at how the Fed's going to have to drain liquidity from the system, when you look at the geopolitical situation, when you look at the systemic imbalance in supply and demand in energy, which the administration's doing absolutely nothing about. In fact, they're making it worse. This deficit reduction plan, it makes exploring for oil and gas that much worse, and they're not changing. Okay, they are not changing. They hate oil and gas. They'll do everything they can to marginalize it. We're screwed for another 2 years. We're completely screwed. So, you add all these things up, and it's like, where's the bull market? There's no bull market. This is going to be a bear market for the foreseeable future. And one of my jobs, I think, on this channel is to monitor the situation and try and give you my best guidance as to where to go with this. Now, I'm not saying get completely out of the market. I'm not out of the market. I'm almost 100% invested in my normal stock, my actively traded stock account. I'm practically 100% invested, but it's mostly in energy stocks, and it has been. And I have hedges on. I have the SQQQ, which is doing fantastically today, but that's a hedge. And then I own Google. So that basically hedges the Google position. And I have a couple others that aren't worth mentioning, but I'm not out of the market. But if you're not in the right stocks, you're going to get completely crushed. All right? So I guess that's what I wanted to say today. Stay tuned to this channel. I'll be coming out with some more content regarding the market and specific investment recommendations. We try and give you the most cutting edge information in real time as we can on the stock and bond markets and various other investments. So thanks for tuning in, and I'll see you on the next either live stream or video. Thank you.